recipes for technical trading success in Cook's Kitchen.
What is holding up this market right now? I thought the correction would accelerate to the downside. Here was the piece I did last week for you that said the correction wasn't over and gave you some indicators to watch for the capitulation. The article version here is pretty short, but the video from last week has all those charts that I want to show you. So let's just go to the index chart here. So what we had, roughly 10 days ago was the S&P 500 finding support above 4,300. Spent a lot of time there. So that's going to be, we just have to call that some strong support right now. But I look for a retest, and that's exactly what's happened. So, so I made that video last week, October 6th. We gap up on, debt ceiling optimism, and then we drift lower. Same pattern here. They're buying the dip, but they can't quite lift it up. So let's take a look at the NASDAQ real quick. NASDAQ, same thing. My target on the NASDAQ is still, I want to see, 14,200 to 14,000 before I reverse my NASDAQ shorts and leverage up NASDAQ long. And I'm just using the SQQQ and the TQQQ to do those. Let's look at the Zacks because chips are part of what's weighing here. I think Apple just announced that they're lowering production for the iPhone 13 because they just can't get the chips they need. And Qualcomm is down in sympathy with that. So you've got a lot of supply chain issues here. I am nibbling at Qualcomm here, but so they took a hit yesterday on the iPhone news. Stock traded down to under 123, coming back a little bit today. But let's look at software. IGV is the big cap weighted software. Still real tough here. And so to answer my initial question, what is holding up this market, instead of getting downside acceleration and panic selling, there's still a lot of interest, and software would be the place to look. And we're going to look at a particular area that'll give us some insight. Let's look at the XSW, which is the equal weighted software. So things are looking real tough here. So I would say that, technology wise, software is holding up while semis take a break. All right. We talked a few weeks ago about FinTech, and I profiled a firm after, over the summer, Square pays $29 billion for a buy now, pay later company out of Australia called Afterpay. And then a firm strikes a deal with Amazon as their lead partner. Here's a firm. I believe these are new highs. Yeah. Got above the IPO highs from February, above 145. So great for them. Here was the piece I did back in early September. FinTech unicorns, how to spot early winners. And I used some research from CB Insights. They do a lot of analysis of venture capital, startups, and companies that are yet to IPO, and just the number of unicorns, meaning a private company that reaches a 1 billion valuation, is just off the charts in FinTech. You're talking about hundreds of FinTech companies on the verge of being unicorns. So there we talked about SoFi and Robinhood and Affirm and Square, Coinbase. So you can reference that and the CB research. Today I have some new research. So let's go to my Twitter feed. First of all, you may or may not have heard of a private firm called Bolt. So here's Bolt. They're not IPOing, even though they're on the NASDAQ. They're up here. NASDAQ obviously has a banner here for new funding. And today, or yesterday actually, Bolt announced that they secured new funding of nearly $400 million. They 18x'd their valuation in 18 months. So when you want to get an idea of what's going on in FinTech and how much money there is out there in venture capital pouring in to these new ideas and new innovations. That's a pretty good example. 18x in 18 months. They obviously put together a syndicate that gave them 393 million. So what is Bolt? Bolt is they're trying to be the Amazon of checkout. What did Amazon innovate? They innovated the one-click checkout, and I think that's what Bolt is trying to do for a lot of brick and mortar. So this put their valuation at $6 billion. Company says it's building a universal checkout login that will help retailers compete with Amazon's speed. So we'll take a look at this picture real quick. So there's the Bloomberg article. European expansion is next. So good things happening for Bolt. And they're growing at that rate because there's obviously a lot of adoption among retailers. So they're really capturing that market. So we showed you that. Okay, so the other piece of research I want to show you, I was just in a presentation this morning with, hey, let's see if I can replay this and show you my colleague, Madeline Johnson. Yeah, you're going to see Madeline Johnson come on the screen here. She did a presentation for our internal strategy group on buy now, pay later. So she looked at all the companies. She looked at what's driving, what the practices are, what's driving the innovation, where it's going, and at the same time, I was already looking at Bolt this morning. So exciting stuff. Let's find out. Oh, so the great thing that Maddie did is she sort of clued us into how millennials, it's demographic demand, right? Millennials and the younger generations, they're going to flock to buy now, pay later. If they can't get a Visa, and a store's going to offer them a package, they can spend a few hundred or maybe a few thousand and buy now, pay later. It's great for the retailers, especially if they close the sale, get more sales faster. And then the younger people, hey, they're learning a form of credit, and hopefully the buy now, pay later companies can keep their books in line. So that's the demographic demand. I wanted to talk about the technology push creating supply. And a great way to do that is via FT Partners, which is a venture capital firm focused exclusively on FinTech. Steve McLaughlin is the guy here that I got on his Twitter feed. He was Goldman FinTech and decided to start his own firm. He published this great slide from a big deck that he just put together for financial technology partners. That's FT Partners. So what you see here are on the left in this column, these are the VC. Okay, this is new investments for 2021. Look how many Tiger Global did 53 investments, and here's most of the big tickers. And I showed you a map similar to this from CB Insights, but this is really drilling down here into who's investing in who. Now it doesn't tell you the amounts, but I'm gonna take some guesses based around some other things I've heard from Steve about what we're talking about here. SoftBank did 40, Sequoia did 31, A16Z did 30, and like you might recognize, here's Chime. Chime got money from Sequoia. Chime also got money from SoftBank. You can zoom in on this and see if there's any other names you recognize. I think I've heard of Clara. Let's see. But a lot of small ones. So, I mean, if we're talking, a few hundred deals here just in 2021, easily a few hundred. These are just the top firms. There's another 200 smaller VCs doing smaller deals. And, just look at the range, like seed capital is 1 to 3 million, and a Series A is 3 million to 10 million. So I just threw out a guess, like, okay, if I've got 200 deals here at an average of 5 to 10 million, you're easily over $1 billion. But the numbers are much higher from Steve. Just in Q3, he's looking at $36 billion in financing in 900 deals. So, and you do that math, that's an average deal size of almost 40 million. So, then you're getting to Series B, C, and you get above 100 million. That's the kind of stuff that happens when you're on the path to IPO, like Bolt. So this is what I'm talking about. The push is two things. It's the money from venture capital, which is extremely deep, and they're hungry to invest. And then the innovators. Look at all the startups, thousands and thousands of startups. You're only looking at a few hundred here, but there's easily tens of thousands of startups trying to come up with the next innovation to be the next Affirm or Afterpay that Square might buy or Amazon might partner with. And so that's the push, innovation and money. And it's bringing all these companies, letting them innovate with capital. We're just going to see you're going to see a ton of IPOs. FinTech IPOs are just going to be, an ongoing trend here for another 2 to 3 years. These VCs, they want to cash out. They want the end game, get rid of them, and invest in something new. So that's what I'm looking at. I'm sort of theorizing that this is also part of what's holding up the market. When you see this sort of optimism and investment in VC, maybe there's bubblicious pockets, but for the most part, there's capital that's hungry for new innovations and new investments. All right, we'll talk to you next week. I'll update the correction in progress. Who knows? Maybe it just turns into a big range trade. Let's go back and look at the NASDAQ. We could come down, test these lows, 14.4 in the NASDAQ, back up to 1500. But right now, resistance is holding. That's why last week I told you, don't buy into this rally on October 6th. I said, do not, that was the day I filmed that. I said, do not buy that rally on October 6th. And here we are. It was a rally not to buy. There might be select things to buy, but for the most part, this market is still feeling heavy, and despite progress on the debt ceiling or whatever else, obviously the next key test will be S&P at 4,300. All right, we'll update it next week. Leave some comments on YouTube if you're on YouTube. Find the article version on Zacks.com. Like and subscribe, and send me your questions at kcook@Zacks.com. All right, talk to you next week.